Hi everyone, today I'm talking about free stocks to buy March 2020, which is one of my favourite video series I do on this channel, and it's where I talk about free stocks that I am looking to buy or add into positions that I already have in the month of March going forward. Now normally at this point I say that I think the stock market's a little bit overvalued and I'm building up my cash pile, but over the last kind of week obviously that's kind of changed slightly going forward. Now my feeling is that the stock market is kind of back at fair value. I don't think the prices yet have got to undervalue prices for me, so I still would like the stock market to go a little bit lower from here because, like I say, I don't see too many undervalued stocks where I'd like to buy, just that the stock market's gone back to a fair valuation really. And with the coronavirus around, I feel like there's potential for this to be a lot longer term thing than people are thinking about. I could see this spreading quite far. Now obviously I'm not a doctor, I'm not a specialist in viruses, but I feel like the virus can get around spreading quite quick, and it is going to be very hard for this virus could easily spread around and get past a lot of inspections that it seems to have already done. And it also only takes one person to go into a big public space, and obviously they'll interact with all them people without knowing they have the virus, and then it expands very quickly. And we are also quite far away from what seems like a vaccine as well, so I believe the coronavirus could be something between a 6 month to 12 month span, which obviously in the long term would carry on keeping the stock market down quite a bit at lower levels. So companies like Carnival Corporation is a stock right now, even though I want to buy the stock, I feel like it's a company that I can just put to one side for a few months because I feel like it will hit them for a long term. So we're going to take a look at the free stocks that I'm looking to buy, and because of the big massive pullback, this is where I kind of look at opportunities to add into my very long-term positions and my favourite companies in the stock market. So if you have an idea which my three favourite companies are in the stock market, you might be able to guess which free stocks I'm going to talk about in this video. Before I get onto the free stocks, I am going to say there's some honourable mentions. So I am watching Tesla and I would buy around about $500. Apple is one I'm watching, which I'd buy around $240. Pinterest I probably will buy, but I've done Pinterest quite a lot on the channel, so I do want to cover that today. Uber I would buy below $30. Altria I would buy below $40. Disney is currently at where roughly I'd consider buying, so I might add that at some point. And iRobot is below $42, is something I'd look at buying. But we'll take a look at my three companies that I'm really wanting to add into over the course of this month. So number one is Microsoft, which is my favourite company on the stock market and is my biggest position that I have in the stock market right now. Currently at these prices, normally Microsoft does not have that much of a pullback. It hardly pulls back at all, and when it does normally pull back, I like to buy the company. But even so, with the pullback, I still like to see Microsoft go a little bit more closer to the $150 mark before I go buy the company. But if Microsoft does go below $150, I will buy it. It is at a P of 30, which is slightly high. Obviously, if you could drop down to about a 25p, that would be absolutely amazing. But overall, when you consider what Microsoft does, a P of 30 isn't too bad. And the industry average is 46. So that kind of shows you that it is not at a bad valuation. It holds a dividend yield of 1.2%, which it is always increasing and has a low payout ratio. So it's a nice little dividend hold as well for holding the company, as well as the value that you'll get with the stock going up. One of my favourite things about Microsoft is the amount of income streams it has, and these income streams is growing absolutely huge, and they're in nice, good growing industries as well. So obviously we've got the cloud industry with Microsoft, which is a massive growing sector that they're doing really well with their cloud services that they have. In Q4 that grew 64%. You've got Xbox, which is one of the only kind of sectors in Microsoft's company that's actually decreasing. It's actually grew a negative 10% in the last quarter, but we know that there's going to be a new Xbox coming out later this year, so that should, everyone's kind of like, I think, just on the hold waiting for that to come out. Obviously the sales are going to dive a little bit when there's one coming out later in the year. Windows, which is obviously the number one operating system, still growing at a healthy 12%. Office, Microsoft made the great decision to change that to a service plan a few years ago, and that's growing at 31%. When obviously you've got all these platforms, we've got ads growing at 9%. I mean, they have Bing, which obviously isn't amazing, but you know, some people still use it. I don't know who, but there we are. And we've got Microsoft Surface as well, which is growing at a nice healthy rate. So those are only some of the like major revenue income streams for Microsoft. They do have a few more, as well as some other investments, but overall you can see they're a very healthy, diverse company with a lot of services that are growing absolutely huge, and they are very aggressive in increasing the revenue. So you're probably always going to have a great company that's going to be increasing their EPS, a revenue rate of 10%, and they'll try and keep that revenue rate up by buying companies out or investing in other companies. Microsoft has a great leadership there. It has a great balance sheet. It does have some little bit of debt on it, but it's nothing huge. They're keeping it under control. And when you're like a company with Microsoft and you have everything that's going on, how aggressively you buy companies as well. Obviously there's going to be some sort of debt there on the balance sheet, but overall it's under control, so it's a good balance sheet. And the only really red flag I've seen about Microsoft really is insiders selling, but when the company's only been climbing as much as it has done over the last kind of year, 2 year, obviously people are going to just take some little bit of profit, and I wouldn't be surprised if there was to be a little bit of a dip that you see some people actually add to the positions a little bit on the insiders. So like I say, I'm definitely looking at Microsoft. Under $150 would be fantastic if I could. It is my favourite company on the stock market. I just would like it to be a little bit undervalued, because right now at these prices I do think it's a bit more fair value. I don't think it has gone down enough just yet for me to get in. But when we look at the company as well, I just call it a 5-star company because you get the share price increase, the dividend growth, the income stream, the management team, the balance sheet. It's a fantastic company, and if you don't have Microsoft, I would consider adding it in on this dip. For me, my averaging price at Microsoft at the moment is about $100. So you can see that I want to kind of keep it a little bit low. So I'll consider what happens with Microsoft. I would love to add into it, but like I say, it has to be at the right price. And on this list, stock number 3 probably will get added before Microsoft. So we'll see what happens. Like I say, I would like to add into it, but I'm just a little bit unsure, because I think, like I said, the whole stock market might come down a little bit more, with the potential for the coronavirus to be a lot longer term thing, and might take a toll on earnings going forward. Number 2 is my second favourite company in the stock market, which is Visa, and you guys know I always have a payment company in my portfolio. I did look at MasterCard as well, but because I already have a lot of investment in Visa, I didn't want to go into 2 companies. I would rather add into Visa, and as well as that, I do think it's a little bit cheaper valuation than MasterCard overall. So in my opinion, Visa is still at fair value. Like I say, I don't think it's overvalued at these prices, but I'd certainly like it to go a little bit lower before I do go buy some more shares in Visa. But I do like payment companies, and payment companies itself do tend to trade at a little bit of a higher valuation because they deserve to, because of the amount of growth and how steady and how easy it's going to be easy money to make on the companies or the stocks going forward because of the growth in payments. It is at a P of 35, which is about normal really for Visa. It has a 0.6 dividend, but I know it's pretty small, but that should carry on growing because Visa will be able to increase that dividend going forward. And it's just a really easy model to understand with Visa. It's a card payment company at the end of the day. I know they've bought other companies out, but the amount of card payments that's going to happen going forward is going to increase. We have the younger generation that are holding or using less cash when going to shops, and they tend to pay by a lot more card payments. So as the generations come through that are using less and less cash, obviously that's going to increase the card payments as the younger generations come through. And also we have a lot of developing countries that don't really use card payments just yet, or are growing absolutely huge. So when the developing countries carry on increasing, they're going to obviously use more card transaction. So that's a great thing for Visa. It also, because of all this, it seems like Visa will be growing at a 10% EPS and revenue growth, and that should carry on for the next few years. And overall Visa, because of this, I see being one of the longer term holds in my portfolio, and one of my favourite companies to hold because it seems like quite easy money. It also has a good balance sheet. The only debt it has on is from when it bought Visa Europe back in, I think it was 2015. Apart from that, it's pretty much stayed at the same amount of debt. So overall, the balance sheet's pretty good. There's a couple of its sellers in the inside, but like Microsoft, I think that's just because they're taking a little bit of profit, because obviously the stock has done absolutely huge. And overall, I see it as a long-term hold because it's going to just easily carry on with that payment growth going forward, the card payment growth, and it'd be nice and easy money from Visa as it increases its EPS and revenue. So I'd love to increase that position in Visa, but obviously it has to be at the right valuation like Microsoft. And still at the moment, I see that at fair value, but with the potential of the coronavirus and how the stocks are going down as well, this one could be one that I'd in. Something below $180 for this one, I'd be really tempted to pick up and add some more shares into my position. My averaging price for Visa is about $150 right now, so I'll see if that comes down a little bit lower, and I'll also be monitoring MasterCard and probably PayPal. I'll consider them too as well, but for me, you've always got to have a payment company in your portfolio because they're really easy money. So Visa is number 2. And number 3 is Facebook, which is a company that I always have felt before even the correction, it was a massively undervalued stock that did not get treated as fairly as it should have done. Over the last kind of year, I said it's probably one of the better stocks to invest in because of the amount of growth it has and how it's being valued. I think it's just had so much negativity because of the fines it's had, and sure, it has hit the EPS, but overall I still feel like Facebook before this correction should have been a $300 stock. So as it goes down even more, I'm starting to see even more value or upside on this list, and out of the 3 companies right now, I see this as the most undervalued one out of all 3 of them. And also I see the potential of Facebook could quite easily be my number 1 position in the stock market. It could easily be my biggest portfolio holding. I could easily see that and I'd be happy with that. So I look at the stock and it's got a forward P of 22. I'm using the forward P because, like I said, the EPS has been hit by some fines, so it kind of doesn't give a true P really. It has no dividend at the moment. It should, I see it though paying a dividend going forward. It just seems really slow to do it because it was slow starting to use buyback programs, even though it uses them now. But in the long term, I do see a dividend being paid because the balance sheet is fantastic, or at least they'll be buying some big companies out there as well because they'll be wanting to use that cash. On this list, Facebook is probably the one with the best balance sheet. I think they're sitting on something like 25 billion cash right now, which is absolutely insane. And there's a lot of companies that they could go out there and buy Pinterest. So we'll see what happens going forward. Now, obviously, I don't want to go on this too long, but obviously Facebook makes a lot of the money from their adverts, and we consider how much they're monetizing them going forward. Obviously, a lot of companies spend a lot of money on TV adverts compared to online platforms like Facebook, and going forward we have started to see that increase, and going forward I see that increasing even more because of the ability to target the audience that they're at. People to then go on like the pages, so customers then retain the people that have seen the adverts, gone onto the page and followed or liked their page. So I see it's a win-win situation for Facebook and companies because it's the better platform to advertise on, and Facebook can also increase how much they're charging for their adverts. So I think Facebook overall will benefit from this absolutely huge. And when you think about what Facebook has, it has 4 of the biggest apps out there right now. People are using apps, spending longer on the phone. Facebook, Instagram, WhatsApp, Messenger. You know, people say Facebook's dying, Facebook's dead, but people are then moving to Instagram, and I think Instagram even has the potential to be bigger than Facebook. WhatsApp, Messenger. So these 4 apps are huge, 4 massive apps that you get with owning Facebook, and I think they're fantastic companies, especially at Instagram. I still think that has so much potential going forward. I have said good management. Obviously, it's been a little bit shaky in the past. They're trying to sort out their act. Because of this, there's been a couple of little fines, but they're trying to move forward in the right way. And eventually, when these fines are paid off, we'll see the EPS jump absolutely huge. We'll also see that's also helps because of the industry that they're in. They can easily make free cash flow or profit off them adverts because there's kind of like hardly any overheads really. A clean balance sheet, which means they can go buy other companies if they want. I'd love to see them buy Pinterest. That'll be a great addition for Facebook. So as well as that being undervalued and the company as well, when I look at Facebook and the coronavirus, I don't see it really being hit by the coronavirus because let's say a lot of people are ill, a lot of people off work. What they're going to do, they're probably going to go on social media platforms, YouTube, Netflix. So if the coronavirus does hit, it's probably just going to see a jump in daily active users on Facebook because people are going to be bored and wanting to do something, so they'll probably go on that. So overall, I don't see Facebook being hit by that much by the coronavirus as well. So guys, there's free stocks to buy in March for me. I obviously think the coronavirus could potentially push the market down a little bit more, and potentially there's, don't go all in just yet. I think a few people see a dip and like, oh my god, this is what I've been told, I need to go buy a dip. But you got to kind of think about price targets and where you think it's a good value for companies, not just because they've gone down. Where's a good valuation, and where's the coronavirus, where could it take companies, and where could it take the stock market? And for me, sure, I might nibble at a few companies, but I'm not going all in just yet. I'd like it to go a bit lower, and if it does go a little bit lower, these are the 3 companies I like to buy. And like I say, probably for me, the most undervalued one and the one I'd like to add is Facebook, because I think it's closer to a fair valuation from my point of view. But I'd love to extend that position that I have in Visa and Microsoft going forward. And that's the video for today, guys, talking about them 3 stocks. I hope you enjoyed it. I hope it helped you out. If you can give the video a like, that would be absolutely amazing. And I'll see you in the next video.